Good afternoon, this is Todd Colvin coming to you from the floor of the CME Group. We are looking at rates and 10-year note yields still holding at range, that 280 to 290 range. Call last week we were talking about nearing that 280 level and possibly breaking out of the range, and lo and behold, midweek, now we're looking at the opposite. We're nearing the top of that range, but still we haven't seen a trade through it, nor is it likely we'll see a sustained trade through it. That 280 to 290 range is held quite comfortably. The market's bounced from the lows to the highs of that range very comfortably, but without any real shocks, and the market continues to kind of drift sideways. And as you can expect, as we remain within the range of expectations, market volatility nearing year-to-date lows. So like in the equity markets, we've seen a trend lower in volatility. We're also seeing that in rates, and I think that will continue. I mean, we look at what's going on around the world, whether it's economic growth, whether it's geopolitical risks. There are risks out there, but the market right now feels very comfortable, especially in the long end of the curve where things are trending towards lower yields, but we're holding in that range. So holding the range, volatility lower. Last, let's talk about Powell. He gave his two-day testimony today, and the two things that really stand out were his comments on trade and his comments on the yield curve. I mean, he's very happy with gradual rate hikes moving forward in 2018 and 2019. He sees inflation stabilizing at around 2%. The growth numbers look very positive, and expectations are very positive via the GDP Now numbers. But ultimately, trade wars are going to cause a bit of uncertainty, and he did hint at that. Likewise, the yield curve continuing to get flatter is a concern, but not something that the Fed is overwhelmingly concerned about, based on the fact that short end, the two-year side of that 2/10 curve continues to go up based on rate hikes. And the back end of the curve, yes, it sees uncertainties, but we are seeing a sustained trade sideways right now. So I don't suspect he'll be too overly concerned unless we see 10-year note yields break below 275, and where we stand right now, closer to 290, that doesn't seem like it's going to happen anytime soon. So right now, treasuries remain in the range. Volatility on the lows. Powell gives the market a thumbs up as we head into the end of the week. This is Todd Colvin coming to you from the floor of the CME Group.